Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 31st of July, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, figures from the Bureau of Statistics today show Australia's inflation rate climbing 1% during the June quarter and 3.8% for the last financial year. That was slightly higher than 3 months earlier, but also expected. The all-important measure of underlying inflation was slightly lower than expected. And that sent bond yields down as investors reassess the likelihood of an interest rate hike when the Reserve Bank Board meets next week. That is now very unlikely, and the S&P ASX 200 surged 1.75% today as a result. It closed at 8,092 points, a new record. Some of the interest rate sensitive stocks did best. Consumer discretionary groups like Wesfarmers, JB Hi-Fi and Harvey Norman all did well. The banks did well, led by Westpac, which rose 2.5%. National Australia Bank and ANZ jumped 2%, and Commonwealth Bank was up 1%. Tech stocks outperformed, with Xero, REA and WiseTech Global all doing well. The energy companies also did well as oil rallied following unrest in the Middle East. A strong performance by Rio Tinto, which announced $9 billion in earnings for the last half year, pushed up its share price, and BHP and Fortescue Metals went along for the ride. Story number 2, the federal government will accept 130 of 172 recommendations in principle, but only 13 in full, after the Disability Royal Commission handed down its findings. The Albanese government will focus on improving job pathways for Australians with disabilities as part of a broad $371 million package that comes in response to the harrowing stories that emerged from the Royal Commission, according to a report in The Guardian. The long-awaited response to the inquiry into violence, abuse, neglect and exploitation of people with disability comes 10 months after its final report shed light on the harm, exclusion and discrimination many experienced. Human rights was at the centre of the landmark report, recommending urgent reforms across housing, education, health, employment, criminal justice and disability services to make Australia a more inclusive society. The principles agreed to in full include a review of the National Disability Strategy, improvements to the employment services model, and transition guidelines for NDIS participants entering custody and returning to the community. Story number 3, ANZ has officially taken control of Suncorp's banking operations 743 days later. It also cost them $4.9 billion. I'm sure it's a relief for both ANZ and Suncorp. The deal was initially rejected by the competition watchdog. That decision was reversed after ANZ appealed, and the Melbourne-based bank now becomes a much bigger player in the home mortgage market, particularly in Queensland. The Brisbane-based Suncorp becomes the pure insurance play, thus ending the only major player in the bank assurance trend that started a couple of decades ago. ANZ's under pressure on the back of the bond trading scandal of recent weeks. It now has to integrate Suncorp's customers to its own systems. That'll be quite the job. Story number 4, Westpac customers will be able to speak to staff at their bank via its banking app using a verified call, and a move the company hopes will help reduce the hundreds of millions of dollars Australians are losing to banking scams each year. In a bid to block ever more sophisticated impersonation scams, Westpac will roll out a new security product in partnership with telco Optus that allows customers to receive Westpac-branded calls via the bank's app, which is used by 3.6 million people each month. The calls, which will be verified by Optus, will also show the reason for the bank getting in touch with a customer, according to a report in the Sydney Morning Herald and Age. Westpac Chief Executive Peter King said it should provide customers with the confidence and added security to help beat scammers and know that they're really talking to their bank. ASIC estimates that in 2023, more than 31,000 banking customers had about $558 million lost in scams. And story number 5, growth in Microsoft Azure cloud service business slowed last quarter, disappointing investors anxious to see a payoff from huge investments in artificial intelligence products. Total revenue in the June quarter increased 15% to $65 billion US. That's about 99 billion Aussie for the 3 months. But the Azure cloud computing service has been Microsoft's main engine growth in recent years. The pace of its growth, though, decelerated to 29% from 31%. Great numbers, but Wall Street investors want exceptional numbers at the moment. Microsoft's share price fell about 6% in extended trading. Alongside peers such as Amazon and Google, Microsoft has been constructing new data centers to meet demand for cloud computing and power-hungry AI services. But in recent weeks, investors have been less patient with tech companies' efforts to make money out of their cloud computing and AI investments. That's it for the afternoon report for Wednesday, the 31st of July, 2024. Michael Thompson and I will be back tomorrow morning with the Thursday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.